Dogecoin went swimming after SNL last week, and since then, cryptos have had a tough week.
So sad seeing those people buying Doge right before SNL.
I see it, I like it, I want it, I got it, yeah.
But scare money don't make money.
We should probably add brave money don't make money either.
So what makes money then?
I don't know, ask Elon, he got rich real fast this year.
True. Speaking of Elon, let's talk a little about Tesla later then.
Sounds good. Let's go over some Disney and Airbnb's earnings too.
Perfect. I'm looking to buy some Mickey dips.
Before that, I'm sure everyone wants to know what's going on with inflation and CPI data.
No problem. We'll cover that first then. But before we do that, be sure to hit that subscribe button so you don't miss out on next week.
So what does it mean for last Friday's unemployment in conjunction with inflation rise?
The Consumer Price Index, or CPI, went up by 4.2% year over year. The CPI measures the change in price level of a weighted average market basket of consumer goods and services purchased by households.
And that drove the rate of inflation to a new high in nearly 13 years.
So usually the overall CPI includes energy and food, which are normally volatile due to the volatility in supply and demand. Basically, any type of events can impact food and energy. The reason market reacted this way to the CPI data is because of the change in core CPI.
And core CPI is when food and gas are set aside, which has increased 3% from the same period in 2020.
The core CPI is a more accurate measure of underlying inflation, and 0.9% is the highest month-to-month gain since 1981, which is why the market was scared on Wednesday.
Fed, who are supposed to protect the US from high inflation, insists that the increase is temporary to try to calm everyone down.
Yup, and the US Central Bank also believes that this is a transitory inflation which will fade by next year and fall back towards the long-term goal of 2%.
So why do you think we are seeing unexpected inflation now?
Well, one reason could be that we had good progress in vaccine rollout and people are ready to travel and spend the stimulus money. So with the demand increasing faster than the businesses can supply, the prices are driven up.
Oh, I see. And we can see that from the cost of food rising twice as fast as it was before the pandemic and the spike in prices for used cars and trucks.
So I heard a lot of people are using crypto as a way to hedge against inflation, which would decrease the value of the dollar. Would you use crypto to hedge?
Personally, I think my way to hedge against dollar depreciation is considered holding rare metals like gold and silver. Crypto is not really backed by anything currently.
Oh, I see. That makes sense. And just by the way, on Thursday, PPI, the Producer Price Index, which is price paid to the producers, increased 6.2% more than the estimate of 5.8%, which is another sign of inflation. But interesting thing is the market was green after the PPI was released.
So like we mentioned last week, the market doesn't need any justification for moves in price.
Speaking of that, let's review this week's market and preview next week's market.
What a volatile week. And we have about a 5% pullback for both the Nasdaq and the S&P 500.
I'm glad to see a nice rebound on Thursday and Friday, and we were able to reclaim the critical support level.
For the S&P 500, let's see if the support around 4,115 to 4,130 is able to hold into next week. And for the Nasdaq, we should keep our eyes around 13,300.
The volume on the bounce is not very impressive. My guess is that we will see another pullback to test the prior low.
Looking at small caps, next support is around 2,100. We should steer clear of small caps next week.
Will do. Just a quick note. Technology, consumer discretionary, and energy sector bounced hard after Wednesday's pullback. So be on the lookout for how these three sectors perform next week.
Bitcoin plunged below 50,000 after Elon Musk said the automaker will stop accepting Bitcoin as a form of payment.
Tesla's still holding around 38,000 Bitcoin. So why have Elon and Tesla suddenly turned against Bitcoin?
The main concern is due to environmental damage caused by its large electricity usage for Bitcoin mining.
And to make matters worse, some of this energy is coming from coal power stations, which has the worst kind of emissions of any fuel.
Bad news one after another for Tesla.
Yup, the stock is heading to the low 500s again, and we might see 400s in the next few weeks.
What else might drag Tesla down? I want to know because once all the bad news are out, the stock will be driven up by exhaustion of bad news.
Besides the car sales not meeting expectation and the recent accident involving autopilot in Texas and California, let's see.
Tesla is also limiting the production capacity in Shanghai because the cars made in China have 25% tariff if imported to the US. So majority of the cars made in China are exported to Europe, but eventually the demand in the US will force Tesla to have to compromise.
But right now, Tesla put more land purchases on hold in China due to tensions between US and China. But I feel like the tension has always been there. So I'm wondering why the market is using that as a reason now.
At the end of the day, once all the negatives are out, that usually is good for the company and the stock. So as an investor, we can focus on the supports.
Absolutely. For support zones, we are looking at 540 to 560. And if that can't hold, the next level would likely be around 500 since it's a nice round number.
And finally, if 500 can hold, then we will likely see around 460 as the next support.
So if you're confident about this company and Elon, price in the 400s should be highly considered.
For your Mickey dips, let's go over the earning real quick.
All right, Disney revenue of 15.61 billion missed estimate of 15.87 billion, but EPS of 79 cents beat the 27 cents estimate.
The revenue dropped 13% year over year and missed on Disney Plus subscriber as well. The market expected 109 million paid subscriber compared to 103 millions posted by the company.
Yeah, that's an important one, since streaming media is the hype right now.
Also, their average monthly revenue paid by subscriber decreased 29% year over year from 5.63 to 3.99. Even though the company explained that it is due to the launch of Disney Hotstar in Indonesia in September of 2020, and that platform's average monthly revenue is significantly lower than the average revenue per subscriber in other markets.
Wow, maybe I need to reconsider Disney at around 170. Do you have some support levels for me?
I see first support around 169 area if Disney can hold 170 area. It will likely drop below 160. I don't see any strong support between 160 to 170.
So below 160, you mean filling the gap in support at around 150 to 152.
Exactly.
AirBNB shares have lost almost 20% over the past week, and the stock kept on sliding after reporting Q1 earnings.
The market didn't like how the first quarter lost more than triple to roughly $1.17 billion.
Yeah, the loss was mainly from repaying the loans they took out early in the pandemic, some restructuring fees, and impairment to the office space in San Francisco.
On the bright side, they beat quarterly revenue by 172 million and reported 64.4 million's nice book, which is up about 39% from the fourth quarter and 13% year over year.
Overall, I think the earning report looks fine. We don't expect this to be a breakout quarter as we are still early in the recovery phase from the pandemic.
I agree. The company is becoming more profitable, but they haven't had any growth in supply, which is the number of hosts.
That's right, and this will directly affect the company's revenue and expansion. Not to mention, they have competitors like Google and big hotels trying to take their share.
This company is trading at 130 to 140 level. Do you think this is a buy?
With the increasing availability of vaccines and the easing of some travel restrictions, we should expect revenue in Q2 and Q3 to be significantly higher.
Yep, but there's still a lot of uncertainty. I would say we need to be a little bit more patient.
Airbnb support is around 126 to 130, but institutions' purchase price is 68. So it's safer to wait until the lockup period on June 8th is over to see where Airbnb consolidates and then make a move.
Well, I still can't believe Airbnb market cap is around $87 billion. That's more than Marriott and Hilton combined. Well, anyway, let's go over some top picks of the week.
So for my first pick, I'll be picking up some PayPal between 220 to 230. The chart looks a bit far from it right now. But with the volatility of cryptos lately, if the train comes, I'll be hopping on with a small position.
My first pick of the week is PEP, PepsiCo. This is looking more like a pending breakout pattern, and I would like to initiate a position slightly above 148. And of course, I will set my stop losses below 146 in case for another rejection at the resistance. And LeBron James just recently signed with the PepsiCo for their energy drinks.
I think Tencent is not a bad option if you don't mind Chinese concept. It's at support right now, so I have started accumulating personally. Just to be safe, we can wait to between 60 to 70.
Financial sector is doing really well. I like to set my buy around 73.8 for Citigroup if the stock prices fall back to test the breakout trend line. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.